Accounting equation A is equal to L plus OE. Assets is equal to liabilities plus owner's equity. In this lecture, we will learn about the accounting equation. Assets is equal to liabilities plus owner's equity. Accounting equation. What is an accounting equation? Financial position of an entity is presented by balance sheet. In this statement, on one side, the resources belonging to an economic entity are presented, and on the other side, the source or claims against these resources are represented. The two sides of the balance sheet are always equal because these two sides reflect the same thing but with two different angles. In brief, balance sheet represents the following phenomena. Assets is equal to liabilities plus owner's equity. This is also known as accounting equation. There are three basic elements of accounting: assets, liabilities, and owner's equity. It is the foundation of double entry system. Assets. Assets are economic resources that are owned by a business and are expected to benefit future operations. Assets may be divided into the following two categories. 1. Current assets. These are assets which have short life or duration and consist of cash or those items which will ultimately be expended or converted into cash within the course of 1 year. The example is cash at bank, stocks, debtors, or receivables, advances or prepayments, etc. Number 2. Fixed assets. The assets are those whose life is more than 1 year. For example, building, plant and machinery, vehicles, goodwill, patent and rights, etc. are called fixed assets. Liabilities. Liabilities are debt. They describe future cash outflows for their enterprise. He is a person or a party to whom payment is to be made at some future date. All businesses have liabilities. Even the largest and the most successful organizations often purchase merchandise, supplies, and services on credit or on account. The transaction involves an increase in the liabilities due to purchase on credit, which is recorded on the right side of the liability account in the accounting equation. There are three main classifications of liabilities. 1. Current liabilities. Short-term liabilities are liabilities that are due and payable within 1 year. Accounts payable, interest payable, income tax payable, bills payable, accrued expenses and short-term loans. Number 2. Non-current liabilities. Long-term liabilities are liabilities that are due after a year or more. Bonds payable, long-term notes payable, mortgage payable, capital lease, etc. Number 3. Contingent liabilities are liabilities that may or may not arise depending on a certain event, lawsuits and product warranties, etc. Owner's equity. Owner's equity represents the owner's claim against the assets of the business. Owner equity is always equal to total assets minus liabilities. For example, owner's equity is equal to assets minus liabilities. Increase in owner's equity. The capital in a business comes from two sources. One is investment of cash or other assets by the owner, and the second is earning from profitable operation of the business. For example, Mr. Ali started business with cash 100,000 and furniture 50,000. Decrease in owner's equity. Capital decreases with two reasons. One is withdrawal of cash or another thing by owner, and second is losses from unprofitable operations of the business. For example, Mr. Ali drew cash from business for his personal use. The derivations of the formula of accounting equation are as under. Assets is equal to liabilities plus owner's equity. Liabilities is equal to assets minus owner's equity. Owner's equity is equal to assets minus liabilities. Examples of accounting equation. 1. Suppose Mr. Hamad started a business with cash 100,000. At this moment, the accounting equation will be as follows. Assets is equal to liabilities plus owner's equity. 100,000 is equal to 0 plus 100,000. Explanation. At this time, the business owns 100,000 cash. Parallel to its business has also liability towards owner for this asset. In other words, cash is resource of business and the source of this asset is the owner. 2. Assume that he purchased machinery from Mr. Ali for 50,000 on credit. After this transaction, the accounting equation will be as follows. Assets is equal to liabilities plus owner's equity. 150,000 is equal to 50,000 liability plus 100,000. Explanation. In total, after this transaction, the business owns assets of 150,000, that is 100,000 cash and machinery 50,000. There are certain claims of people over these assets. These people are outsiders as well as owner himself. The claim of owner is called owner's equity to differentiate it from the claims of outsiders. Number 3. Business earned cash 10,000. The following changes will take place in the equation of the business after this transaction. Assets is equal to liabilities plus owner's equity. 160,000 is equal to 50,000 plus 110,000. Explanation. In total, as you can observe that the income on the one side increased the assets of the business and on the other hand also increased the claim of the owner over the assets of the business because all the profits and losses belong to owner. 4. Owner withdrew cash 2,000 for his personal use. The equation will represent this transaction in the following manner. When owner take away anything from business for his personal use, that called drawing and that is deducted from his capital. Assets is equal to liabilities plus owner's equity oblique capital. 158,000 is equal to 50,000 plus 108,000. Explanation. In total, after withdrawal of cash by the owner, the assets of the business have reduced and this withdrawal also reduces the claim of the owner over the assets of the business. If you observe all the transactions carefully, you can easily conclude why both sides of the business and balance sheet or accounting equation remains equal. If we present the above transactions in detail, it will look like this. Serial number, transactions, assets, liabilities and owner's equity. Assets are cash and machinery. Liability owner's equity, creditors and owner's equity. Transaction 1. Mr. Hamad started business with cash 100,000. Cash 100,000 and owner's equity 100,000. Number 2. Purchases machinery from Mr. Ali for 50,000 on credit. Machinery 50,000, creditors 50,000. 3. Earned cash from business 10,000. Cash 10,000, owner's equity 10,000. Owner withdraw cash 2,000. Cash minus 2,000, owner's equity minus 2,000. Total 158,000. Assets, cash and plus machinery, liabilities and owner's equity total 158,000. Thus, the accounting equation assets is equal to liabilities owner's equity is proved.